Thank you, Mr. Chairman. Good morning, Director, Deputy Director. Great to have you here. We're just going to dive right into it, something I have done the last couple years. Very interested in tax reform. And the governor has proposed changes to the corporate tax, net income tax again, and is proposing the implementation of mandatory combined reporting beginning in the year 2020. And I was wondering if you could provide a brief and maybe a simplistic explanation, although it's a complex issue because I've done a lot of reading on it, but maybe you can give us a quick overview of what it is and how this method of filing corporate tax returns differs from what we currently do here in Pennsylvania.
So in regard to combined reporting, basically what it is, it's the method of reporting taxable profits. And currently we have a separate entity reporting regime. So each subsidiary or parent corporation would file a separate return. Under combined reporting, what you're going to do is you're going to define a unitary group. That is businesses who have related management, operations, synergies between them. And this would include parents and affiliates in different states. And the idea with combined reporting is basically an attempt to prevent potentially abusive transactions, which would potentially shift profits out of a state from a high tax state to a low tax state. That could include things such as rental payments or interest payments, royalty payments. Potentially passive investment companies are used or captive REITs in order to make these profits. So it's make these payments. So it's an attempt to address those abusive transactions that might shift profits out of the state.
Well, just following up, because I don't, and I've done some research, some reading, I don't think combined reporting is necessarily the end all. And it's my understanding, I wanted to touch base with you on this, that other states who've converted to mandatory combined reporting, that several of those states actually had less revenues actually came in than what they had estimated. And I was wondering if you could comment maybe on the reliability and the accuracy in estimating the revenue impacts of doing such, doing this type of reporting. Because I do know that even the states that do have combined reporting, which is about 22 or 23, half do it one way, half do it another way. And maybe you could just comment on that.
Sure. Currently, most recently, Kentucky and New Jersey just passed combined reporting, and that will become effective in 2019. So currently, roughly 26 states have combined reporting. To your point on the revenue estimates, our take on the literature, if you look it over, if you're looking at academic studies, it really is a mixed bag. Some find modest impacts on revenues. Some studies do find that it doesn't have an effect. There have even been other studies that find it could potentially reduce revenues. If you talk to tax administrators, you'll get a different take. For tax administrators, they generally agree across the board that it would expand the tax base and it would add to the revenues. So there is a difference of opinion. One key item in the combined reporting estimates is how we treat NOLs, or net operating losses. So that's crucial, and we currently don't have the detail. We're waiting for the language to see how it will be treated in the current proposal.
That's a key area, and I think somebody will probably follow up on that. The one thing that I've also noticed, and people have come into my office, have talked about combined reporting. Certainly we have an interest in tax reform. I noticed that a lot of states that have enacted this, they incur additional administrative costs, and it often seems like corporations get tied up in court fighting, there's lawsuits based on, well, are you really should you be part of this combined entity or not? And maybe you can comment on that, and when you have other states that are discussing this, what is the problem with all these lawsuits in other states when there is combined reporting? Maybe you can give me some background on that.
Yeah, if you look across the states, the main challenge, I believe, is really defining the unitary group. I mean, what companies should be included and what should not. And there are some tests that are out there that states generally rely upon. General ownership, operations, and management, are those shared between the different entities? Each state does it a little differently, and there are court cases that are challenged, of course, and we would expect that would happen in Pennsylvania as well. When we scored this out last year, we did allow a delay because some of these court cases would need a few years to play out as the unitary groups are challenged. So that would be expected. It is a bit more complex. It does require more staff for the Department of Revenue, a little more staff for the firm to comply with the requirements.
And I see I'm just about out of time. I just maybe will end with one comment. I think in order for Pennsylvania to be competitive, if you even want to consider combined reporting, you got to drop that tax rate much lower than what's the governor's recommending at this point from what I'm reading and what I'm looking at. So thank you, Mr. Chairman, for your time. Thank you, both of you.